Chapter 11, we're going to talk about the internal control framework that's required for publicly traded companies through the Securities and Exchange Commission. So we have our internal control objectives are that we're dealing with internal policies and procedures, and the objectives are that they are going to ensure that the financial statements are reliable, that there's efficiency and effectiveness of their operating systems, and that they are in compliance with all the laws and the regulations that govern their industry. So the internal control structures are 100% the client's responsibility. The auditors are just going to come in and test to see that they're working properly. But the client's management needs to establish and maintain those internal control structures, again, to provide that assurance that the financial statements are fairly presented. And again, there's always inherent limitations anytime you're within a company, and it all depends on the competency of the person performing the task. So obviously, like let's say you're dealing with accounting and you don't have anyone that has any accounting background. They never even took accounting, don't even have a college degree. Obviously, there's going to be some inherent limitations as they enter in the information into the computer system or the IT system. So Sarbanes-Oxley requires that management is signing off on the design of the internal control procedures, like how they set stuff up, and the test of the operating effectiveness to verify that, yes, it is occurring. So now the auditor's responsibility is to have a sufficient understanding of that internal control structure and then to test it. So they're just going to, again, focus on how it impacts the financial statements. So what are the most important controls do they need to look at to test? They'll also look over the controls that are over classes of transactions. So like, our last chapter, we talked about how can fraud happen in sales and accounts receivable. So that would be a class of transaction. They're going to focus on what kind of controls do they have in place to ensure that, fraud isn't happening there and that everything is operating effectively. So they will perform those tests of the internal control structure in order to issue an opinion on the management's assertion of that internal control structure for a publicly traded company. This kind of shows you the components, kind of how everything is linked together. So we're going to talk about these 5 objectives. So the control environment, risk assessment, control activities, information communication, and monitoring activities. But all of these would go down to all these different levels. So these are like levels to say this is at entity level, this is at division level, this is down to the operating unit, and these are functions inside of that operating unit. And again, our overarching theme is we're looking at operations, the reporting, the financial reports, and compliance with those laws, the laws and the regulations that govern their industry. So it all kind of goes together in this cube. So again, we'll talk individually about the different objectives, but we have, or the components, we have the control environment. So we have policies and procedures that operate within that control environment and reflect the attitude of management. So integrity and ethical values, the commitment to competence and hiring competent employees to do their jobs effectively, that there's an objective board and audit committee. So our Sarbanes-Oxley requires that audit committee be independent of audit management. They should either report directly to the auditing board or the auditing committee or to the CEO. So they got to be above kind of that level. Then the audit committee should be responsible for hiring the actual public auditing firm or accounting firm that they use to audit the financial statements. There should be some sort of whistleblowing process in place. So possibly you've hired that outside third party with a toll-free number that people can call anonymously and give a tip. And they should be able to engage in outside counsel as needed. So again, they're kind of above and beyond just the management of the company. The control environment also covers the organizational structure, the chain of command. So again, kind of going back to that cube that we had, the entity level, the divisions, the operating units, and the functions within those operating units. And then there needs to be accountability within that environment. So the tone at the top should be ethical and honest. There possibly should be incentives that are provided for people for being honest and having integrity. Not incentives that are always just tied to net profit numbers. You know what I mean? But maybe ones that are tied to more ethical behaviors. Then we have risk assessment. So the client's management should focus on risk at all of those levels. So again, back to the entity level, the division level, the department level, and the functions within those departments, to minimize their errors and to use the best internal control procedures that will prevent fraud and encourage again honest and integrity. So what the management really should do is they look through all of their policies and procedures, ask, okay, well, what could go wrong? So like, again, say we're in the sales. There could be fictitious sales recorded. There could be returns that are not processed. In accounts receivable, there could be bad debt that's not recorded. So those are things that could go wrong. Then the next step is, okay, look at all those things that could go wrong. What can we do, again, within the organization of the company to stop those things? So what processes could we have in place? Could we double check things? Maybe there has to be a shipping document in order for an invoice to be sent out. There's going to be a red flag if there's any duplicates in your invoice numbers. Things like that. If you're going to issue a credit on a customer's account, there has to be a sales return notification or documentation filed. So again, they'll develop specific actions that will help reduce that risk to a more acceptable level. Then we get into our control activities. So there should be adequate separation of duties. So a lot of times when you're looking at your internal controls, that's a really big thing. If we can separate duties, we can really have a lot of double checking and like a system of checks and balances. So if we separate the handling of assets and recording assets, so again, say like you're the person who gets all the checks that come in from customers, well then you're not the same person who then applies those checks to the customer's accounts. So somebody else handles the checks, somebody else makes that recording. If you're the one that's handling the inventory and stocking the shelves, you're not the one that's then going back and recording that invoice and putting it, or that bill from the vendor, and putting it into inventory. So those should be done by two different people. A separation from processing and authorizing. So again, if you're the one who's like, you're in the accounts payable department and you're processing those invoices to be paid, somebody else has approved that invoice. So it's not just you looking at the invoice and you making the payment. There's another, like when I worked at the oil and gas company, wherever that invoice generated, so if it was the office manager who ordered office supplies, she's going to approve it. If it was somebody out in the field who was working on a well, they're going to approve it. So our accounts payable person processed it, but somebody else who actually ordered the product and ensured that the product came in is authorizing it. Separation of operations and record keeping. So again, that, like, if I can use the oil and gas company again as an example, our operational folks ordered all kinds of stuff. And a lot of times, they're not accountants. They would try to say, hey, you need to capitalize this. This was a major repair, capitalize it. Well, then it would come to our accounting department and we'd say, well, did it increase the life? There'd be different questions that we'd ask. And then we'd say, nope, it's just a major expense and we're going to expense it. But that was the role of separating those two, because they had incentive to want to capitalize it and not expense it. They got like quarterly bonuses based on the profitability of their areas. We in the accounting department did not. So, we're trying to follow generally accepted accounting principles. So if we can keep those separate, things get recorded more independently or using proper procedure. Separation of IT changes and users. We're going to have a whole section on our IT side of things, but obviously an IT change can impact multiple transactions. So we got to make sure that all of those changes are authorized and accurate. Proper authorization for all activities is also, again, very important. So whether you're making payments, setting up new vendors, whether you're setting up new employees, if there's a system of double checks in there that can stop fraud. Adequate documents and records, use of pre-numbered forms that are prepared immediately, and with everything being computerized, normally that's all a system of the IT function, so that the next invoice is going to be a new number. The next check written is a new number. So all those things are numbered and automatically set to go that way. Physical control over assets. So keeping assets, especially ones that would have a tendency to want to be stolen, locked up. So especially say like cash, say you're a retailer and you have cash on hand from all your registers. Those should either be locked up overnight or go immediately to the bank's drop box so that they're totally even off site. Independent periodic checks by an independent party, such as like allowing the controller to reconcile the bank accounts. So you have different people who are making deposits, people who are cutting checks, but so someone above them is actually looking at those bank reconciliations to see, hey, was there any checks that cleared the bank that were not in our system? Did everything tie out with our cash receipts? So again, that independent system of checks and balances. Again, we're going to talk in more detail about our IT systems, but information and communication are very relevant and especially in today's world where everything is computerized. We want to make sure that all those processes and those reports are properly like organizing the accounting and transactions. So we're looking at relevant quality information and that they're preparing the financial statements accurately, grouping expenses together and all those kind of things so that everything flows well. Then the monitoring, again, is the client's responsibility to test those internal controls periodically to determine if they are effective. The internal auditors, as I said on a previous slide, they should report directly to either the CEO or the audit committee. And then if the internal auditors are objective, then their work can be relied on. So again, if they're not underneath of the accounting manager or something like that, the auditors can rely on their work, which would help reduce the testing that the external auditors need to do, which again is a cost savings. So then now we get into the IT again, because like I mentioned on a couple of those previous slides, IT is a big part of any accounting or business related activities of a company. So there's general controls. So the administration of the IT function should be a high priority in any large company. You want to have competent employees there. You want to have it fully staffed so that everybody is able to do their job and do it effectively. There should be segregation of the IT duties. So management is going to be over top of our systems development people who are actually making changes to the software or how the system runs or how it groups data, how it makes reports, all that stuff. Operations are going to be the people who kind of do the more, data entry, putting stuff into the system. And then there should be a data control person who then is looking at the output and verifying that everything is running smoothly. So the systems development is the risk that there could be any unauthorized program changes. I mean, imagine if someone could go in there and change how, expenses group or how income groups or where a fixed asset ends up on a balance sheet. You know what I mean? Like, so you want all those things to be very, very uniform and not change. So anyone who's going to get in and make those kind of changes needs to be an authorized user. And again, normally it's all through a software system, but it's the IT staff who's going to develop that software and they're going to initiate testing. Normally, if you move from like one software to a new software, you do like a parallel test. So you make sure I'm going to do a month of data with my old system, a month of data with the new system, and then run the reports. You should get the exact same reports. If you don't, then there'd be something wrong with that, or you'd have to make some programming changes. So more general controls. There should be cybersecurity within every company. I mean, I feel like that's more and more in the past 5 years. We've heard more and more of that. I mean, there's what that pipeline on a few years ago got hacked into, and there was, you know what I mean, like money had to be paid to release it. So I mean, those kind of things can happen to a corporation, which is crazy. So they really need to have cybersecurity and have the personnel capable of maintaining that their systems are safe and you know, not able to get hacked into. So obviously physical safety, the main frame of your systems, like at the oil and gas company, we had it kind of in the center of the building, but there was no windows. That we had certain walls that had to be around it, like in case of like temperature changes and fire and things like that. So it was a very secure facility. Then there obviously should be online security, and that is more and more happening. So a lot of times now it's not only just a valid user ID and a password, but maybe you get a, like what we're doing at Stark State, we get a scan on our phone or a little notification on our phone that says, hey, is that you signing in? So then you've got like backup. I mean, heck, in some real IT technical, you know, like scientific places, they're like scanning your retina, putting your fingerprint on a pad. I mean, so we know that those things exist. Obviously, in corporate America, we're probably not that far yet, but a lot of times we do still have that secondary double check to make sure it's us. Obviously, when you're dealing with IT, it can shut a whole company down. So there's definitely got to be backup and contingency planning to make sure that if anything goes awry, there's a plan to get us quickly back online. And a lot of times, those backup files are stored off-site. So in case there is a fire or a tornado or things like that, you know, you're not just totally wiped out. So then application controls get into the processing of actual individual transactions. So like say you're inside that, your software, is there validation? So like if you type in the wrong account number, does it pop up and say, I'm sorry, that account number does not exist? If you're putting in a journal entry, does it pop up and say, hey, this doesn't balance? If you try to, you know, delete a check that's already reconciled, is there a message that says, hey, that was already reconciled? So, I mean, those are the type of input controls that it's talking about, that it just is going to error at you if you are not matching up the right vendor numbers, you know, general ledger numbers, things don't balance, that kind of stuff. So those are our input controls. Then our processing controls maybe like when I worked at the oil and gas company, we had a few different controls. So we had input controls that would beep at us as we're doing it. But some of the stuff, like I think for us, I feel like the property numbers didn't catch until the end. Then like we'd run a report at the end of the batch, and then it would give you, hey, you know, maybe you're out of balance or this property number doesn't exist. You'd get more errors before you could actually post it. So there was some things that beeped at you right as you tried to data entry them. Other things that came up on like the batch report that you had to correct before you could post. So those are all kinds of things built into your IT function, again, to help you be more accurate and to not have errors and to detect those errors before you actually post them to the general ledger. So then this gets into, again, some of the more, things are so much more advanced in the IT side of things. And to be honest, I haven't worked in auditing since a lot of these advancements came in. I almost feel like they need to have like IT level staff who look at these environments of, especially of new clients or if clients change, just to verify, because it kind of takes it a little bit out of our wheelhouse. But so we have network environments where there's local area networks and there's wide area networks. So local is all just within the company. Wide could be within the country or the world or just outside, but people are obviously logging in and using those same computer systems. So they're accessing that data, they're processing transactions, but they're from all over. Most large companies use ERP systems, database management type systems, where again, we've got vendors and customers and properties and general ledgers, and all of these operating functions have unique, okay, I can go into my accounts payable function or my, invoicing function. There's different functions within those ERP systems, payroll, general ledger, and you have different options when you get inside of those. You're definitely going to be, if it's a major ERP system of a multinational company, Obviously, there's going to be a lot more room for error, and backup is definitely going to be even more crucial. Keeping all of the equipment and everything safe is going to be a big deal. And then in today's world, there's more and more e-commerce. Everybody likes to shop from home. So then you have to get into, okay, well, now I have external users logging in to make purchases or whatever. I've got to have firewalls, encryption techniques, digital signatures, all kinds of very advanced IT functions. And so again, you're going to need more IT personnel who are able to handle all those things. Cloud computing environments, where again, a third party is processing that data. That outsourcing company needs to be living up to the same internal control structures that management has, and that needs to be able to be vouched and double checked. So again, IT is a very technical side of it, and I think once the auditors get comfortable with it and there's no changes to it, then they can feel confident that the numbers that are being generated out of the computer system are accurate, and everything's free from material misstatement, at least from that standpoint.